Ladies and gentlemen, good day and welcome to the Suzlon Energy Limited Q4 FY25 earnings conference call. During this call, the company management may make certain statements that reflect the outlook for the future, which could be construed as forward-looking statements. These statements are based on the management's current expectation and are associated with uncertainties and risk, as detailed in the annual report. Actual results may differ, so these statements should be reviewed in conjunction with the risk the company faces. As a reminder, all participant lines will be in the listen-only mode, and if you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. We will begin the opening remarks followed by the Q&A session. To be fair with the others, we kindly request each participant to ask no more than 2 or 3 questions. From the management, we have with us Mr. J.P. Chalasani, Group CEO, and Mr. Himanshu Modi, Group CFO. Over to you, J.P. Chalasani, sir. Thank you.
Thank you. Good evening, everyone, and thank you for joining us for Suzlon's annual earnings conference call. This year marks a significant milestone for us. It is our 30th anniversary. Over the past 3 decades, Suzlon has demonstrated resilience, innovation, and a forward-looking spirit that continues to guide us. We extend our sincere gratitude to everyone who has been part of this long journey, to our visionary leader, to our committed leadership, passionate employees, loyal customers, and dedicated partners. A special note of thanks to our investors and the analyst community for your unwavering trust and continued support. Talking about the industry, the draft notification on inclusion of the updating of wind turbine generators on the RLMM will give a big boost to the domestic supply chain with the local manufacturing of blades, tower, gearbox, and generators. Moreover, it also requires that the R&D and data centers to be placed in India. As the most integrated domestic OEM, with an in-house R&D, Suzlon is fully compliant with and well aligned to the government's current policy direction. We are pleased to report at another record-breaking quarter, marked by an all-time high order book exceeding 5.5 gigawatts, reaffirming our leadership across PSU, C&I, and utility segments. Notably, Suzlon secured 1.5 gigawatts as the sole winner of NTPC's PSU tenders, underscoring our continued focus on product quality and alignment with evolving market dynamics. Order book for the S144 model now exceeds 5 gigawatts, a testament to superior technology and strong customer confidence. We take pride in stating that S144 is truly a made in India, made for India product. I repeat, it is a made in India, made for India product. On the manufacturing front, our capacity now stands at 4.5 gigawatts, with both nacelle facilities in Daman and Pondicherry fully operational. We have also expanded our blade manufacturing footprint with new plants in Madhya Pradesh and Rajasthan, ensuring we are well positioned to meet production requirements for the coming year and beyond. Turning to execution, Suzlon has set a new performance benchmark by delivering a record-breaking 1550 megawatt this year, more than double the megawatts delivered last year. The industry commissioned around 4.2 gigawatt in FY25. Though 28% growth is there, it falls short of expectations due to transmission and land acquisition challenges. However, with over 2.5 gigawatt commissioned in March last year and April this year, combined, signaling a positive shift in execution pace. At Suzlon, we commissioned 336 megawatts in FY25, with an additional 370 megawatt erected WTGs currently in the pre-commissioning phase, bringing the total to over 707 megawatt. With less than 30% of our order book comprising non-EPC projects, where land acquisition lies outside our scope, client-side delays have impacted commissioning timelines. To address this, we have prioritized projects with partial land availability upfront. Looking ahead, projects like NTPC come up with substantial land readiness, offer greater commissioning visibility for FY26. Additionally, Suzlon is actively pursuing a long-term strategy to mitigate land-related delays by developing an active project pipeline. Our OMS business continues to do well with more than 15 gigawatts capacity in India, with machine availability ensured above 95%. Renom, our new entry, continues to strive for customer fleet acquisition with assets under management crossing 3 gigawatts. Our forging and foundry business started showing uptick in the last 2 quarters, and we expect to continue this trend in FY26. Our top priority remains the timely execution of our robust order book while maintaining the highest standards of quality and ESG. I would now like to invite Himanshu to take you through our financial performance.
Thank you, JPC sir, and good evening, ladies and gentlemen. As always, I would be using slide numbers 18 to 26 of our investor presentation, which has now been uploaded on our website as the reference point for my discussion during this presentation. FY25 has marked a transformative year for Suzlon, defined by remarkable achievements with highest ever revenue, EBITDA and PAT post FY17. Our entire team demonstrated unwavering dedication, making this one of the most successful and memorable year in our journey so far. Taking you through the Q4 FY25 numbers. In Q4, Suzlon continues its exponential growth trajectory, delivering 573 megawatts, which is almost 2x on a year-on-year basis, with all financial parameters showing a strong uptrend. Suzlon recorded consolidated revenues of 3,774 crores, delivering a strong 73% YOY and 27% Q-on-Q growth. EBITDA for Q4 FY25 stood at 693 crores, marking a 95% YOY growth and a 39% increase Q-on-Q basis. EBITDA margin improved by 200 basis points to 18.4%, up from 16.4% in the same quarter last year. Suzlon achieved the highest ever quarterly PAT of 1181 crores. This of course includes the deferred tax asset recognition, which we've done in this quarter of about 638 crores. Taking you through the full year FY25 numbers, FY25 marked a key inflection point for Suzlon as the benefits of operating leverage in the WTG division have begun to materialize. The WTG division revenue surged by 101% from 4,215 crores to 8,481 crores, driven by a 118% increase in deliveries from 710 megawatts to 1,550 megawatts this year. This operational momentum translated into a remarkable 392% growth in EBITDA for the WTG business, underscoring the strength of Suzlon's scalable business model. Notably, WTG contribution margin has surpassed our earlier estimates of 20% by 360 basis points to 23.6%. On a consolidated basis, Suzlon delivered a strong performance in FY25, with revenue surpassing 10,000 crore mark to 10,851 crores, registering a 67% YOY growth. EBITDA is 1857 crores for FY25, which is a surge of 80% on a YOY basis, with improvement in EBITDA margin to 17.1% from 15.8% in FY24. Suzlon reported a robust PAT of 2,072 crores after exceptional items and including the impact of deferred tax asset recognition, marking 190% YOY growth. This strong performance reinforces our confidence that the company has firmly transitioned into the next phase of its operational turnaround following a successful financial revival nearly a year ago. We are pleased to report on our balance sheet as of March 25 reflects a strong position of exceptional strength with a consolidated net worth of 6,106 crores. Our net cash position has risen to 1,943 crores, marking an increase of 836 crores over Q3 FY25, which further enhances our financial flexibility and resilience. Our end-to-end wind energy model, backed by a fully integrated supply chain and a proven execution track record, with best-in-class service offers a competitive edge that's both unique and hard to replicate. Moving on, in terms of an outlook for FY26, Suzlon has made significant progress in operational excellence initiatives in FY25 and has got full support of various stakeholders, as mentioned by JPC sir earlier. The outlook for the future looks very promising, with a strong order book in hand, proven execution capability, a strong management bandwidth, and working capital facilities tied up. On the back of all these pillars, as we look ahead for FY26, we are confident of achieving 60% growth across all key parameters in FY26 over FY25, which in any case meets all analyst expectations or estimates made by the about 8 analysts that we have. With that, I'd like to conclude my presentation and open the floor to any questions that the callers may have. Thank you.